The jobs report is less than 90 minutes away.
Yeah, what about that?
Steve Liesman joins us with more on this. Get us out of here.
What do we call this thing? I mean, is this like the most important jobs report ever? I mean, there's a lot riding on this August jobs report. Investors, they want clues. Whether, how much, and if at all, the economy is weakening and the outlook for Fed policy from all this. Here are the expectations. Job growth of 150,000. Seems the balance in the market between the bulls and bears is so tenuous, the number could move expectations either way. 3.7 is the unemployment rate, again, down near historic lows. Average hourly wages, a 0.3 would be a good number. But remember that August ADP number for just the private sector coming in pretty strong. We'll be looking for
count on that. Why can't we count on that? ADP.
It may be, especially remember Mark yesterday said the sample for August.
He keeps trashing his own numbers.
Right, that's true. The sample for August from the government is low, which means in this case and in many cases, the ADP sample is actually higher. Anyway, data had an effect yesterday. We had strong data, strong service numbers, reducing the outlook for rate cuts. Take a look at what happened. We dialed back a little bit on October, the chance of a rate cut, still at 100% for September, and dialed back December, moved that into January. So that's another thing we'll be looking for today. Now, let's talk about this. Two opposing forces at play. You have uncertainty over the economic outlook versus a tight labor market. That is uncertainty over whether businesses can find the workers they need. So let me give you two quotes that I've been reading this morning. Joe Basuelos writes, the narrowing in profit margins, disappointment in corporate earnings, and a second quarter decline in fixed business investment are likely to lead to reduced hours and consideration of layoffs. Forget about all that, says NFIB President and CEO Juanita Dugan. She says small businesses continue to grow and add jobs despite talk of a potential economic slowdown. However, their biggest challenge remains a lack of qualified workers. You guys were talking about how much economics is a science. Well, it's definitely an imperfect science. You can't write a formula for how thousands of employers are going to react to an unprecedented trade war, global economic weakness, and a historically tight jobs market. And, of course, how a central bank is going to navigate all of that, guys, with its interest rate policy.